The Bulls run the week as we head into November. How will they end the year? This is Invest with Jacob. Okay, guys, so last week we talked about the fact that the market should be bottoming and rallying pretty strongly to the upside as we were completing a leading diagonal to the downside, and we often see very strong reversals, and that's exactly what we saw. The market rallied all week back up to the 43.80 area before stalling on Friday and trading a little bit sideways into the close. Now the question is, how high can the bulls take this? I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, with the strong move higher, we are expecting a pullback from around this area. But before we jump into the charts to look at that, here is yet another example of someone who joined our group, took the messages to heart, learned the system, understood what we're doing, and they have crushed it. You can see their account since September has gone up dramatically. They're extremely excited about being in here, and if you want to be a part of this winning group, stay tuned for later in the video. But for now, let's jump into the charts and take a look. Okay, guys, so here we are on the daily futures chart for the S&P 500 on Mondays. I do like to do a little bit of a bigger picture view, and so we're zoomed out a little bit into the daily. Nothing's really changed from last Monday. We're essentially still looking at this as an A wave down, a B wave bounce, and then we would be looking for a C wave down in the bigger picture overall toward the 3,200, 3,000 area, just kind of depending on how the setup plays out. But that's kind of what we'd be looking at in the bigger picture. Now, how we get there, so far, we do have a leading diagonal setup off of the top. So you have a 1, 2, 3, 4, 5. And if you remember, not 3 days ago Friday, but the Friday before that, I told you this is a very likely bottoming area as we were at the 168, 1764, which is a very common diagonal ending area, as well as some other things that we teach in my Elliott Wave for Beginners course that told us a bottom was in this area as well. And we should be looking for a really strong rally if that's the case, and that's exactly what we saw. We were long most of the week and killed this rally to the upside. And so they came back up, and now they are approaching some key support. And when we drill in, we'll get into that a little bit more. But what you'd like to see is you'd like to see this wave 2 hold up here in the 44.27 to 44.60 area. And then the start of wave 3, which you would get a wave 1 down back toward this low, a little bit of a bounce, and then the true breakdown toward this area, and then a 4 and a 5 overall. So right now we should start to approach some heavy resistance. It's unclear exactly how this is going to play out, but that's what we'll talk about when we drill in. There is, of course, an alternate path and a bullish path, so we can still count this as a diagonal to the upside, okay, where you have A, B, C for 1, you have wave 2, you have A, B, C for 3, you have 4, which gets back into wave 1 territory, which is what you would expect, and then you would have an A, B, C up for 5, which would take us up to about the 4890, 4900 area, basically. You would look at it more like that. Look at about the 4900 area. That would be the bullish alternative. And the higher they take this initial drive off of the low, the more that does allow this count to play out, and we'll look at why when we drill in yet again. But this is big picture stuff here. So the higher they take this off of the low, the more it does start to shift our perspective to looking at this count and kind of seeing if it's going to play out. We still need to see the pullback. As always, the pullback tells the story. A 3-wave pullback would be bullish, and a 5-wave pullback would be bearish. So as you come up, okay, if this is going to be wave 2, you would expect the next move down to be a 5-wave move because it would be impulsive to the downside. So you'd expect 1, 2, 3, 4, 5, then a 3-wave bounce, and then the breakdown. So 5 waves down is bearish rather, and 3 waves down would be bullish. So let's drill in and take a closer look. Okay, guys, so here we are on the 2-hour chart, and we talked about it again on the big picture. We talked about it all last week that the bottoming area should be here. We should see a strong rally basically straight up, which is what we got. And so here we are, and now's where it gets a little bit tougher because of how high they've pushed here on the initial move. So the question is, are they just going to push up and be done in wave 2 and then come down without any kind of real structure? Very possible, especially considering we're coming off of a diagonal. Are they going to give us a B and C where they pull back and then give us a C wave up slightly higher and then break down? Okay. Or are they going to give us the bullish look where they push up a little higher here, then pull back and then push up for an A wave and then a B and a C up toward that 4,900 area to complete an ending diagonal off of the October lows of last year, which would be a really big ending diagonal, but would materialize if they came back up and took out this high that they make, and then the 45.51 area would really start to make us think that that kind of count is coming into play. So let's talk about each one of those, because right now it's a tough spot to be in where we're entering this blue box. You can see we've entered the lower portion of the blue box here, and this is heavy resistance. So if they're going to pull back, this is the spot where they're going to pull back from, or even collapse it straight down. And the whole idea of each pullback is this. If it is a corrective 3-wave pullback, and that's what corrective means, 3 waves, nothing else, okay? If it is a corrective counter trend pullback, we would look for either a C wave higher or a continuation, up in a higher A wave and then B and C, okay? If the first pullback is 5 waves, where you get 1, 2, 3, 4, 5, like this, then it's much more bearish, and we're looking at the bear count playing out where we'd then get an A, B, C up, and then the breakdown. Okay, so the pullback tells the story, and it can tell it from 2 spots. So the first spot is here, obviously, right? Where we're at, the market's down maybe a point or two, nothing to write home about yet. But from where we're at in this general area, if they start to pull back, that would be the first place we'd look to see what kind of pullback we get. Again, A, B, C tells me we're going to go higher. Okay, and then 1, 2, 3, 4, 5 tells me that ultimately we're heading lower. Now, the second place we would look for that pullback, so let's say we do pull back from where we're at, we get an A, B, C, and then we come up to here, okay, the 618, common retracement, nothing out of the ordinary here, and then we get a pullback. This pullback will be the next one to tell the story, and if you see 1, 2, 3, 4, 5, that's bearish. We'd be looking for a spike and then a down. But if you get up there and you see a 1, 2, 3 or an ABC type move, so you come up and you get an ABC down, you get a C wave up, okay, and they come down like this, then I would expect the breakout to the upside toward the 4,900 area. So you have this high, either where it's at right now or slightly higher. We'll watch for that pullback. And if that pullback is corrective and they come back up and take out this high, then we have to watch the next pullback. And if that pullback is corrective, then we're bullish up towards 4,900. But if it's 5 waves, then we're bearish down to about 3,000, 3,300 overall. So really the pullbacks are what's important. How high they push, somewhat irrelevant. Obviously at some point they push too high, but how high they're pushing right now is mostly irrelevant. The pullback will tell the overall story. Over on the NASDAQ. Okay, guys, here we are on the NASDAQ daily chart. Again, similar to the ES where you're looking at a potential ABC down, but the NASDAQ is the problem, right? I've been saying this for a long time. If you're bearish, the NASDAQ is your problem. And the reason is, off of the high, you still only have 1, 2, 3. Now, if you count this as wave 3, that does not qualify. It is not how diagonals work. This is not where you'd want to see a wave 3 end. This is where you would want to see a wave 3 end. Then you get wave 4 back into wave 1 territory, so all of that is fine. We're just starting to get up to the point where it's too high, and they really shouldn't want to push this up too much higher than they have. The 15,300 or so area is about the max, so they really need to start a downturn soon. Remember, the NASDAQ never broke its pivot down here at 14,128. It stayed above it. It is qualifying as a wave 4 pullback and could easily make the wave 5 higher up toward this area here, which would play out with the ES making its ABC higher. So NASDAQ is an issue in that the overall structure to the downside is not what I would call ideal. You don't have synchronicity between the NASDAQ and ES and count. This would still be a wave 3 and a 4. So you'd be making a 5 down to complete wave 1 And that could coincide with ES's wave 1 of 3, 2 of 3, and then break down altogether. That's fine. They can resync the count. It's not like they can't get that back into check. It just is always a little bit of a warning when they're not exactly in sync, and when the NASDAQ still has not taken out its pivot to the downside while ES has. So ES is your problem, but overall we would expect one more wave down toward the 13,600 area or so for wave 1. Then we'd look for a wave 2 bounce off of that, and then we'd look to start wave 3 down here toward the 10,000 or so area, and then you'd look for 4 and 5 after that. So NASDAQ on the big picture, same type of setup in the sense that we would be looking lower first and then a bounce and then much lower. But it has not broken its pivot, and its alternate path is still that we can make a 1, 2, 3, 4, 5 to the upside to complete that move, take us to new highs, and then we would look for a pullback drop after that. So NASDAQ has some different counts available to it. And over 15,300 and the bullish count does start to take the lead and make things a little bit uglier on the NASDAQ. So let's drill in a little bit and take a look. Okay, guys, so here we are on the 2-hour NASDAQ chart. And as I said, this 15,300 area really starts to become the stopping point for what you want to see as this wave 4. Above that, and we start to get a little bit high for where you want to be in a diagonal. And of course, over wave 2 completely invalidates. This is a situation that's not really ideal on the NASDAQ. It's getting a diagonal finish type rally when they didn't finish a diagonal. And so what you would be looking at here is you'd look for them to hold this wave 4, and then you'd look for an A, B, C down in wave 5 toward that 13,600 area. Now, you don't have the luxury of seeing the pullback to understand how that's going to work like you do on ES. ES to the downside should be looking for a 5-wave move, but because NASDAQ is still ending a diagonal here, you're still looking for a 3-wave move to the downside for the new low, so it'd be more like an A, B, C kind of setup like that. So you're not going to see an impulsive move down in the NASDAQ. So that makes it a little tougher when it starts to pull back and you're like, hey, it looks corrective, we're going higher. Well, not necessarily, because it's going to look corrective in both counts, the downside count and the upside count. Now, for the bulls, you would want to see kind of a 4 or 5 to end 1 here. Then you'd look for a wave 2 pullback, 1 of 3, 2 of 3, breakout, and then 4 and 5 up to the 17,000 plus area to give us new all-time highs. And that would be the finishing move for the NASDAQ to the upside, where you'd have this big 3, a 4, and then a 5 to the upside. So NASDAQ can continue higher. It did not break its pivot. It does still have its natural bullish path available. Again, the NASDAQ is the problem for the shorts and something that the shorts must pay attention to overall. So really we're looking for a 4 or 5 here to complete wave 1. Then you're looking for a 2, 3, 4, and then 5 up from there. So 5 on up and 3 a little higher. But something like that where the NASDAQ breaks out to new all-time highs if the bulls are going to take control. Otherwise, we're looking for a breakdown. Again, that will be an ABC pattern, so it will look corrective. So you'll see like an A, B, C for A, and then B, and then you should see the C wave down into that 13.6 area. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It will take you right over to the webpage. Once you're there, check out our membership plans area. We have 2 incredible monthly plans that both come with a 7-day free trial, because I want you to get in there, become part of the community, learn about our system, make sure you love it, and make sure it's for you before you ever spend a penny. You can cancel at any time. We also have our Elliott Wave for Beginners course. This course is helping real traders make real money and finally understand the market in a way that makes sense. When Powell comes out hawkish like he did last week and the market rockets higher, it's very confusing and it's hard to understand. But we were all over it in Elliott Wave, and we were long, and we made money on that move because we understood what was going on. That's how Elliott Wave can help you get ahead of the market, and we teach that in our course. So if you're tired of seeing good news make the market go down and bad news make the market go up, then check out this course where you can finally learn how to understand it. The course itself is 25 videos that I teach in 3 sections. Your introduction, where you learn about Elliott Wave's expectations, the mindset, the KISS method, and why it works, your chart setup and tools, which is the most important part. We go through each tool you need on your chart, why it works with Elliott Wave, how to use it, and how to understand it so that you can see things like the bottom we saw last week. We also go over the Elliott Wave for Beginners area, where we go through each wave, why it works, why it doesn't work, when it fails, how it fails, what it looks like, everything you want to know about what you're looking at so you can have the key levels to trade off of and understand this market. We teach the theory of alternation, the corrective depth theory, the pivot, everything you need to know so that you can make sense of the market and make money trading. The really cool thing, guys, if you don't want to pay the $67, it is included for free in both monthly rooms. So if you become a monthly member, you get the course for free. In my first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go over exactly where we are in the charts and what to expect, as well as the training material you just saw. We trade the SPY and the QQQ, and we swing and day trade in my room, which means we trade quite often. However, if you are looking for individual stocks, futures trading, and advanced training, you're going to want to check out PT's throne room. He absolutely crushes it in there. You get individual stocks, futures trading, and PT's reduced risk binary method that just crushes the market. He gets you in at a cheap price and gets you huge multiples on your money, and it's how he structures those trades that's so unique. It's something you kind of have to see to understand, and that's another reason we give you that 7-day free trial. He also started a challenge account where he put $4,000 into an account, trading mini ES futures, averaging 3 to 4% gains per week, showing you how to build a small account into a large retirement or savings account. Guys, we would love to have you in these rooms so we can all make money together. Okay, key takeaways for today. We are looking for a pullback, maybe not necessarily today, but it should be soon. They're in this blue rejection box here. This is heavy resistance. We should be looking for at least a little bit of a pullback. Remember, 3 waves down, corrective, expect higher. 5 waves down, impulsive, expect lower. That's going to be the key. Do we have 5 down or 3 down? Then we can expect either another push here, and then we'd look for the next pullback for our next clue, or we'll see the breakdown earlier than we thought. Over on the NASDAQ, same type of situation. The NASDAQ is approaching that 15,300 level, which is pretty critical to hold given the overall setup that they have. They want to hold that and push lower. NASDAQ not as easy to see on the pullback as it will be 3 waves, but we would be looking for an ABC down toward the 13,600 in the bearish count. And if they can give us a 4 or 5 to the upside up toward this 15,500 area to complete wave 1 of that move, then we'd look for a 2, 3 to the upside and a breakout from there. Guys, that is your market update for today. I will talk to you tomorrow.